There is drama behind the scenes as two of the most well-known media companies in the US and the world might be about to merge. Reports have surfaced that the CEOs of Warner Brothers Discovery and Paramount have met to discuss a possible merger of the two media giants. It's also been reported that the Warner Brothers CEO, David Zaslav, has met with the owner of Paramount's parent company, National Amusements, adding fuel to the merger fire and opening up another possibility that Warner Brothers might merge with or acquire National Amusements instead of Paramount. Although these talks have been informal for now, a merger like this would be huge for the media industry. So in this video, we explore why a merger like this could happen and how likely it is that it will go through. Welcome back to PST Markets. A good place to start is the interesting fact about this merger, which won't be a merger of equals. Warner Brothers has a market valuation of about $28.4 billion, more than double Paramount's valuation of $10.3 billion. So this is more a case of Warner Brothers acquiring Paramount. Given how streaming is becoming more popular and competitive, it would make sense for Warner Brothers and Paramount to combine their two streaming platforms, Max and Paramount Plus. A more likely scenario would be Paramount Plus being scrapped and moving its content to Max since Warner Brothers is the bigger company. This merger could help Warner Brothers compete with big streaming platforms like Netflix, Disney+, and Amazon Prime. The merger could also result in an additional 63.4 million users migrating to Warner's Max platform, bringing its total number of users to 140 million, making the new platform the fourth largest streaming platform, just shy of Disney's 150 million users. Not only would the new platform have more users, but it would be able to offer a lot more in terms of content. Both companies own similar media outlets, which could be combined, for example, Paramount's CBS News with Warner Brothers CNN. But the golden goose for Warner would be Paramount's lucrative NFL sports rights that Warner Brothers doesn't have access to. So we know why this is appealing for Warner, but why is Paramount keen on the deal? For starters, Paramount currently has a mountain of debt worth $16.97 billion due to recent streaming service investments. The number more or less remained the same throughout all of 2023, meaning that Paramount hasn't been doing a job of paying off the debt on its own. Another reason that this deal could go through is that the owner of Paramount's parent company, Shari Redstone, actually tried to sell the company before, after announcing that she intended to sell to devote more time to non-media related activities like combating anti-Semitism and spending time with her family. As for Paramount's other suitors, Warner's main rival is Skydance, a media company that is backed by Redbird Capital, an investment firm that would like to acquire all of National Amusements. Another suitor is Netflix, who would be looking to acquire some of Paramount's assets, such as its movie studio, with hits like Top Gun, Maverick. However, Netflix might not be able to acquire these assets because Paramount's management wants to keep the company intact so that its value remains the same. So could Warner Brothers be the lucky company that acquires or merges with Paramount? It won't be easy to pull off since a potential deal has plenty of obstacles. It even seems like investors are skeptical about the deal. When the news broke, Warner Brothers shares immediately dropped 5%. The downtrend has continued, and now, a month later, Warner Brothers shares are down 16%. As for Paramount, its stock rose initially on the report, but then quickly returned to the level it was trading at before the report came out, and spiraled down from there. They too have fallen around 16% in the month following the report. But what is spooking investors? Investors could be worried by the precedent set by Warner Brothers' merger with Discovery. The merger created a true media giant, but came at a steep price of $43 billion. This has left the newly minted Warner Brothers Discovery with a debt of $45.1 billion. Warner Brothers made plenty of budget cuts and layoffs to deal with the debt increase, decreasing morale. Therefore, investors may be worried that another merger would be too big for Warner Brothers to swallow. The debt might be making it difficult to finance a merger with Paramount because if Warner Brothers had the money it needed to merge with Paramount, they would have used it to pay off part of their debt and wouldn't have had to cut costs. So in order to buy Paramount, Warner Brothers would have to raise even more debt or sell stocks, but selling stocks would decrease the share price. It wouldn't be popular with investors. Also, do not forget that in addition to Warner's debt, Paramount already has a mountain of debt on its own, so combining the two companies will increase the debt for both, making it much harder to pay off. Finally, it's worth mentioning that this isn't the best time for anyone to be accruing more debt. The U.S. Federal Reserve has hiked rates to a two-decade high, and U.S. Treasury yields, which influence debt repayment rates, are also very high. The Feds have recently hinted from time to time at the possibility of cutting rates in the near future, but whether this is actually going to happen anytime soon remains to be seen. If it does, it could be an encouraging push for the merger. Investors might also be worried because the creation of such a huge media giant could trigger a wave of consolidations in the market. Competitors of Warner Brothers and Paramount would fear that the merger would increase the market share of their rivals, and so will undertake consolidations of their own to counter the threat. This would increase the competition to the newly merged Warner Brothers and Paramount company. However, regulators are a more serious source of worry for investors and a major obstacle to a deal being completed. The merger would undoubtedly create a huge media company, which might look a lot like a monopoly in the entertainment industry. This normally wouldn't be an issue, but we also have to remember that recently, the regulatory environment has become much more hostile to consolidations. Signs of the change in the regulatory environment include blocking a major deal involving Adobe to acquire a competitor and forcing Illumina to divest its subsidiary, Grail. The Adobe deal, in particular, may show how regulators are now tougher on deals that they see as anti-competitive. The Warner Brothers or Paramount merger may be seen as such a deal. Despite all of these obstacles, Zaslav seems optimistic that Warner Brothers will make an acquisition in the next 12 to 24 months. It is in line with Zaslav's strategy of hunting for acquisitions and then cutting what he sees as dead weight inside the newly acquired companies. This is exactly what he did as CEO of Discovery when he bought Warner Brothers and cut costs within the newly merged company, including through layoffs. He might do the same with Paramount. If the debt and regulation issues could be overcome, would such a deal be the best way for either company to deal with its most difficult challenges? Paramount's biggest problem right now is the decline of the cable TV industry, which is caused by the rise of streaming services. Paramount makes the vast majority of its profit from ad-supported linear TV channels like Nickelodeon. As for its movie studios, while some blockbusters like Top Gun: Maverick have been great successes, the company is losing a lot of money on costly underperformers such as Transformers: Rise of the Beasts and Dungeons & Dragons: Honor Among Thieves. This is why it began its venture into streaming by launching Paramount Plus in early 2021 to keep up with the changing scene in the media industry. Combining Paramount Plus with Warner Brothers Max is then a step in the right direction. As for Warner Brothers, despite facing the same threat of declining cable subscriptions to a lesser extent, the main issue is that it needs to get back on its feet by paying off its massive debt and becoming profitable again. It already seems to be headed in that direction, with Barbie making $1.4 billion and the video game Hogwarts Legacy making $850 million in the first 2 weeks of its release. Adding Paramount to its inventory could strengthen the revenue stream. However, both companies need to keep in mind that a merger isn't a golden solution to their problems. We've seen how the Warner Brothers merger with Discovery hasn't arguably been very profitable. Both companies need to improve the content of their streams in order to be able to compete with giants like Netflix, which now has its own production studios and actively looks for content creators. So, while the deal could push both companies a bit further, it's not even close to a drastic solution. Mergers can't help much with big structural problems, especially for companies saddled with significant debt. To conclude, Warner Brothers and Paramount seem keen on a merger, albeit for different reasons. Warner Brothers and Zaslav would like to expand through acquisition to compete with the big boys of streaming, while Paramount needs a strategic buyer to save its struggling business. It remains to be seen whether the deal will actually go through and how beneficial it will be. It most likely won't be before April of 2024, because Warner Brothers would be taxed very heavily if it were to close an acquisition deal before then, as per a tax provision that was used to facilitate its 2022 merger with Discovery. What do you think about this deal? Do you expect it to go through? And is it a good idea in the first place? Let us know what you think in the comments down below. And if you like our content, make sure to like the video and subscribe for more. That's all for now. See you in the next one.